Warren Buffett once said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." In this video, I'm going to show you how you can find these wonderful companies which are on sale. Specifically, I'm going to talk about Dividend Aristocrat stocks and show you one method to know if these stocks are currently undervalued. I'm also going to show you how you can do this all on your own. By the end of this video, you will know what are Dividend Aristocrat stocks, where to find them, and how to determine if they are on sale. Hello everyone and welcome back to my channel. My name is David Das. Please remember that I am not a financial advisor and this video is not meant to be an investment advice of any kind. I am, however, a 23 plus year stock and option trader who retired from the corporate job 7 years ago. And stay tuned to the very end of this video where I have provided 3 bonus tips to simplify your research process. Recently I made a video on how to find top Canadian dividend stocks which you may find useful as well. So let's get started. What are Dividend Aristocrat stocks? For US Dividend Aristocrats, visit this website for details. Link is provided in the description box below. Basically, it's one of the S&P 500 companies that have increased their dividends every year for the last 25 consecutive years. If you want to get more information, go to the fact sheet and obtain this PDF document. If we scroll down the fact sheet, you will find that this is the information about how they picked Dividend Aristocrat stocks. First of all, as I mentioned, it's a member of the S&P 500 index. It has increased dividends every year for at least 25 consecutive years. It has a market cap of at least $3 billion US, and it should have an average daily value traded of at least $5 million US for 3 months prior to the rebalancing reference date. If you scroll further down, it will give you some more information that you can research on your own. But the one thing that I'm going to show you is there are 64 Dividend Aristocrat stocks as of September 30th, 2022. And these are the top holdings by index weight as of September 30th, 2022. So these are the stock symbols and these are the sectors. And if you scroll further down, there is a breakdown of different sectors, different countries. I will draw your attention to this ticker NOBL, which I will explain later. For Canadian Dividend Aristocrats, the rules are a bit different. You can find more information on this website. I have provided a link in the description box below. So in order to be a Canadian Dividend Aristocrat, you have to consistently increase dividends every year for the last 5 years. And you click on the fact sheet to get more information, which I'm going to explain next. This is the fact sheet of Canadian Dividend Aristocrats Index. It has a section on the methodology, which is highlighted now. The members should be listed on the Toronto Stock Exchange. They must have increased dividends every year for at least 5 consecutive years. They have to have a market cap of at least 300 million Canadian dollars. And there are rules on weighting and diversification. If you scroll further down, it has more information that you can study on your own. But I'm going to highlight a couple of things which are here. As of September 30th, 2022, there were 93 stocks in the Canadian Dividend Aristocrats Index. And these are the top 10 holdings by index weight. So these are the symbols of the stocks, and these are the different sectors for the top 10 holdings. Again, it has a sector breakdown, and I'm going to draw your attention to this ticker symbol CDZ, which I will explain later. So you may ask, what is so special about Dividend Aristocrat stocks? In my opinion, this is one way of finding a good company without going through complex fundamental analysis. These companies are generally reliable, tend to be leaders in their industry with a reliable cash flow, and has a track record of impressive annual returns. They provide stable income for shareholders. Income is in the form of dividends, which are consistently growing over the years. These companies tend to be large, well-established companies. Many are largely recession-proof, enjoy steady profits and growing dividends in good times and in bad times, and these are less volatile than the broader market. But like anything else, there are limitations in this method as well. The growth of these companies may be limited. Dividend payments are taxable events, which are generally higher than the capital gains. Dividends are not guaranteed by any means. If profits decline, the dividends can be cut or eliminated, and in that case, the stock price will likely plummet. So now we have identified some good companies. So the next step will be to find a fair price. In this video, I'm going to show you a very simple method to determine if the stock price is undervalued or overvalued. Before I do, let's talk about two things: dividend and dividend yield, sometimes called yield. Dividends are money paid to shareholders as a percentage from the corporation's earnings or profits on a regular basis, such as monthly or quarterly. But as I mentioned before, dividends are not guaranteed by any means. If the profits decline, the dividends may be cut or can be completely eliminated, and in that case, the stock price will likely plummet. This is one of the reasons I'm talking about dividend aristocrats, which have a long history of dividend growth. Dividend yield is basically dividend divided by share price expressed in percentage. So if the share price of a stock is $100 and it pays an annual dividend of $5, then the dividend yield is 5 divided by 100 equal to 5%. If the annual dividend remains the same, the dividend yield will fluctuate every day with the stock price. For the same company, if the stock price drops to $50 and dividend remains the same as $5, the dividend yield will be 5 divided by 50 equal to 10%. If the stock price increases to $200 and dividend remains the same as $5 annually, the dividend yield is 5 divided by 200 equal to 2.5%. We can therefore conclude, if the stock price drops, the dividend yield increases. If the stock prices rise, the dividend yield decreases. We will use this analogy to find undervalued stocks where the current dividend yield is more than its 5-year average dividend yield, because this information is available easily and for free. This method is called dividend yield theory. This method works well with large established blue chip companies which have a long history of dividend growth. Keep in mind though, no valuation method is perfect. So what did we learn so far? We found good companies increasing dividends over a period of time. Now we have to find which of these companies are trading at a fair price using dividend yield theory valuation method. Let's go back to the top 10 holdings of US and Canadian Dividend Aristocrat stocks. I'm going to pick only the top 3 US and Canadian stocks. You can do the same exercise for all of them as a part of your research. The next step is to find the fair value of each of these stocks. I have created this small spreadsheet on Google Sheets, and I have listed the 3 top Canadian stocks and 3 top US stocks, and I'm going to go to Yahoo Finance and try to fill these next 3 columns and then determine whether the stock is undervalued or overvalued. When the current yield is more than 5-year average, we call it undervalued, and when the current yield is less than 5-year average, we will call it overvalued. So now let me go to Yahoo Finance, and I'm going to find the information about the first stock, FSZ. So go to Yahoo Finance, fsz.to. So it's Fiera Capital Corporation. The price is 8.65. Current yield is 9.77. And the 5-year average yield is, if you go to stats, scroll down, it has a 5-year average dividend yield is 7.58. So in this particular situation, the current yield is more than the 5-year average, so we will call it undervalued. Next, we'll go to the stock PPL. Go to Yahoo Finance, PPL, ppl.to. The stock price is $43.47. The current yield is 5.87%. And the 5-year average, we will go to the stats. We will scroll down, and 5-year average is 5.85. So the current yield is slightly above the 5-year average. So by definition, it is undervalued. The next we'll go to ticker symbol KEY. Again, we go to Yahoo Finance. We'll go KEY.to as it is traded in the Toronto Stock Exchange. The price of the stock is $28.69 Canadian. The current yield is 6.56. Five-year average, we'll go to statistics, scroll down. 5-year average is 6.40. So by definition, this is also undervalued. Now let's look at the three US stocks. The first one is ALB. We go to Yahoo Finance. We'll type in ALB. The stock price is $280.94. Current yield is 0.57%. The 5-year average dividend yield is, let's go to stats, scroll down. 5-year average is 1.34. So by definition, the current yield is less than 5-year average, so that is overvalued. Next symbol is CAH. Go to Yahoo Finance. Type in CAH. The share price is $69.44. The current dividend yield is 2.84%. The 5-year average yield is, go to stats, scroll down, is 3.61. So by our definition, this is overvalued. The next stock is ADM. Go to Yahoo Finance. The share price is $85.75. The current dividend yield is 1.99%. Five-year average, stats, scroll down, 2.82%. So again, by our definition, the current yield is less than the 5-year average, so that is supposed to be overvalued. So if you want to verify that by going to a stock chart, let's do FSZ. So FSZ is currently at a kind of a support level, and that's the reason it has undervalued. Let's go next PPL.to. We are looking at a weekly chart. Again, it's kind of at a support level, and it says undervalued. The next Canadian stock is KEY, and we are looking at a weekly chart. So KEY, I'm trying to look at the bigger picture right now first. Again, it is kind of at a support, and it has shown to be undervalued. Now let us see how does ALB look like on a weekly chart. ALB seems to be at a resistance level, and it is showing as overvalued. The next stock is CAH. Same thing on a weekly chart. It is way higher up here. No doubt it's showing overvalued. The next one is ADM. It is somewhere between the resistance and the support at $85.75. And according to our definition, it is overvalued. So you can do this exercise for all the stocks, and then you can shortlist them for your further research. Now I'm going to talk about a few bonus tips. Bonus tip number 1. If you do not want to deal with all the calculations, the details, and the analysis, but still want to participate in the Dividend Aristocrat stocks, you may consider NOBL ETF for US Dividend Aristocrats and CDZ for Canadian Dividend Aristocrat Index. Bonus tip number 2. For a complete list of stocks in these Dividend Aristocrats, let's scroll down the information for NOBL. It has the performance information, the total return, about the fund, exposures. But the most important thing that I was looking for are the holdings. All the stocks which are in the US Dividend Aristocrat stocks. Same thing goes with the CDZ. If you scroll down, it has all the information about the performance, the fund information. But what I'm looking for is a list of all the stocks which are here. So I have picked, this is the top 10 holdings, and these are all holdings. And these are sorted by weight. Bonus tip number 3. I have added an additional column called yield difference. And I have basically taken the difference between the current yield and the average yield, divide by the average yield, and expressed as a percentage. So which is D4 minus E4, D4 minus E4, divide by E4. That came out to be 29% for FSZ. At the same time, I created a condition that if the value is greater than 0, it will be green, and if the value is less than 0, it will be red. And I have selected from G4 to G9. The intent of this exercise is you can then sort them according to the yield difference, and higher the yield difference, the more undervalued the stock is. So you can make a decision about which ones to pick if we have many choices. There you have it. I hope this video was useful. Thank you for watching, and I will see you next time.